Hey everybody, wanted to do a video on breakers again. Getting a lot of questions just on some simple concepts, but I understand where some confusion's coming from. So just want to go over, we take a look at kind of the last 2 hours of today. There was a bearish breaker and a bullish breaker. I took the bullish breaker, and I'll kind of go into detail on everything of why I didn't take the bearish breaker, and I did take the bullish breaker. But first, I want to draw this little schematic here. What does a bearish breaker look like? It is a high, followed by a low, followed by a higher high, and then a rejection below the swing low. And then it typically will run back up and then continue down. So it's a high, low, higher high, then followed by a lower low. So let's take a look at this price right in here. We have a high. Let me zoom in, sorry. Real good so we can see it. We have a high. Why is this a high? It's a 3-candle pattern. We have a low, followed by a high, followed by a lower high on that candle. So this up close candle is the high. Then we have a low. Why is this the low? Because this candle and this candle is higher than the lowest point of this. So we have a high, a low, and then this last down close candle right here is a higher high. So what we look for at that point, we have the high, low, higher high. So in this manipulation leg right here, which goes from the low to the high, we want to utilize the last down close candle in this sequence, which would be this one that put in the low. So this entire candle is considered a bearish breaker. But to not clutter up my screen so much, you'll typically see me just do something like this with a breaker. But know that this whole candle right here is your bearish breaker. Now, it does not get activated until we have a closure below the body. Okay, so you can see this candle right here did not close below the body of this candle. This candle did. As soon as we get confirmation that a closure is below this, this breaker is now valid. But why did I not take this trade? I was watching the charts, I saw the setup, but I chose to pass on it. Well, I have a set of rules that I've shared with some in the room. I've also talked about it, or you can see the annotations on my chart when I take it. But ideally, what I'm looking for the last 10 minutes of the hour to the first 10 minutes of an hour. So right here, this would be 1350 to 1410 time window. All right, let me make this bigger. So there are times that I will take my setup outside of a time window. A lot of stuff has to align. Higher time frame key levels, or just something that really stands out to me. But this window right here to right here is when I'm looking to take the trade. So when did this breaker form? Well, this breaker actually formed inside my time that I like to look, but it did not activate until 217. So at 217, my time had already passed. However, this is not the only reason I did not take this trade. I also want to look for, and you see it on my charts all the time, divergence, and I have it listed as SMT, which stands for Smart Money Time, because the time needs to be right on the setup, and I need to have divergence at the correct time to take my trade. We did not have this divergence here. If you look at a 15-minute chart or even the 1-minute chart, ES had a high right here, YM had a high right here, and then these highs right here, none of them ran. So the patterns were exactly the same. So the markets were not tipping its hand on which way it wanted to go. But one thing that I do utilize when I miss a move like this, because this move, I mean, it was great. It got down to 4.5, 5 standard deviations, which if your entry, you would have had to have taken it right here on this swing low. That would have gave you a 5-hour return based on your risk. Now, another question that I get is, where do we draw the measurement from? It is always the manipulation leg of the breaker. So, and sorry, let me repost this. I actually use for my measurements, I use this swing low, okay? So I use this as the manipulation leg, which gives my projections down here. But this right here is the manipulation leg, okay? So my fib tool goes from the high down to the low of the manipulation leg, and then we project our measurements. These are not fib levels, it's just the fib tool that I utilize. It is standard deviation moves, which are mathematical calculations of a projected move. So I missed this move right here, and I don't want to say that I missed it because I was not going to take it. I was right there at the charts and I watched it. It was outside, it did not meet all my criteria, so I passed on it. But what I do when a breaker like this forms, I will take the projections and I will line up and see where a reversal is likely to occur. And with this type of calculated measured move, you will see, bear with me, you will typically see reversals happen in between the -2 and -2.5. That is why my targets, I always take partials at -2 to -2.5, and then I'll move my stop to break even. But the next level that we look at is -4 to -4.5. This has a huge probability of having a reversal at this level. Now, this dark black line right here was the low of the day. So this low was put in at 9:47 during the New York Open, and we reversed and went higher. So we had this low of the day put in right here. The projections based off this manipulation leg right here lined up perfectly with running these lows and then reversing. So I had this area, RJZ, it stands for rejection zone. So this is an area we could see a reversal at. So I had this plotted on my chart and I patiently waited. Now let me move this down and we can look at where this time lines up. And I will zoom in. So this is the 1450 to 1510 time frame that I want to look to trade. Okay, so I'm going to move this box out of the way. That was my level of interest. And then what we will do, I want to zoom in, and I did get some messages from people asking, well, this isn't a breaker. Why did you take it? Because all they looked at was this low, which ran the lows, a high, and then a failure swing to take out this low. But what I guess an untrained eye would not notice is we have a low right here, because this candle's low is higher than this low, and the candle to the right of it is higher than this low. So this is a swing low. Swing high, followed by a swing low. And I will draw this schematic out right here. This is a bullish breaker. Low, high, lower low, followed by a higher high. This pattern. So you can see right here, a low, which lines up there, a high, which lines up here, followed by a lower low, which lines up here, and then we didn't break through it there, came back down, and then we finally broke through it here, which gave us that higher high. All right, so what got me very interested was when we took out this little swing high right here. This, even though we only wicked through it and closed back in, I was ready to take this trade long, because this on a lower time frame, and even this right here, is showing on the smaller time frame that we have market structure shift. Order flow is now bullish. So as soon as this candle opened, it dropped and bounced, and as soon as we closed above this wick right here on that breaker, I went in long. And I believe I got in, I'm sorry, actually, I marketed, when it dropped down here and bounced up, I marketed it in right here at the 39.50 level. So if you go look, let me, one thing that I was looking at, you can see SMT with ES hourly. And I don't want this to confuse anybody, but what we're going to go do is now pull up the hourly chart. And this was the divergence I was looking for. Oh goodness, we got so much stuff on these charts. Sorry, let me take a bunch of this off. So one thing that you will notice, we have no wick right here on this candle. But why is this candle significant? There was high impact news on Friday at 10 a.m. that created this candle. These news candles are, they are draws on liquidity, okay? Meaning the market will run back to them at some point. Well, today, as I'm watching price, and I'm just gonna put this so we can see it, NQ came down here. It never came down here and ran these lows. So if we go pull up ES right now, and we look at that same candle, which was Friday at 10, what do we see? Let me zoom in. ES ran this low, while NQ was still up here. So this is a bullish divergence on NQ. So it goes something like that. And now we'll drop back down to the lower time frame. So you can see I have my SMT right here. Sorry, it should be more like that. Had the SMT right here. I drew my projections, and the projections went from this low to this high, the manipulation leg of the breaker formation. And if you run them up, I took partials at 2 standard deviations, which my entry was closer to here, so it was 2.5 R to $1 risk. And then you can also see right here, my final target lined up with a significant swing high of the day, and it came within that -4 to -4.5. So this was my ultimate target at the end of the day. You can also see here I did take partials at the 1400 opening price. This is a significant level because it's one of 2 4-hour candles that opened during the New York cash session, 10 a.m. being the first one, and then 2 o'clock being the second one. And as you can see right here, what happened when we ran above it? We ran above it and immediately rejected. I honestly thought that this move was going to lead to lower, a lower low on the day. But we came down, came back up, and then into the day we had that last 10 minute of the day algo squeeze that just ripped every short's face off. And we hit the target right, almost at the close of the day, and I took my full off. But again, the basics of the breaker. We have a low, swing low, 3 candle formation, swing low. A high, 3 candle formation, high. Followed by a lower low of that first swing low, 3 candle formation, lower low. And then once we close back above the breaker or the swing high of this breaker, you can mark it in and enjoy the ride. I hope that this helps clear up some confusion that some people have with this setup. And one thing that I'm noticing right here that I do want to discuss. Let's say if all 3 of these were equal lows. I personally do not look at that as a swing low, even though we had a high here and then a pullback. If all 3 of these candles are equal, that's not a swing low to me. It's just equal lows, and more than likely, we're going to target them later in the session, which right here, you can see this candle took them out. But it has to be, for this to be a swing low here, I would need to see this wick go down something like that, and it would have been a low. And this now would have been a swing low. But that did not happen. They were equal, so I do not view that as a swing low. Again, hopefully this helps clear a few of the questions that I've been getting. If it does not, please let me know. Send me a message, and I will try to explain something else or in a better way. But I hope everybody has a good evening. We got medium impact news at 10 a.m. tomorrow. Looking forward to trading it. And I hope y'all have a great night and chat with everybody tomorrow.